Our next presenter is a historian with a PhD in economic history. She is now the head of research right here in Vancouver with GWL Realty Advisors, with a global reach managing $15 billion in real estate. Now, this is not just an observation we can make, because she probably is responsible for your pension and your insurance. So we hope she does a good job. Her research and insights are much sought after around the world. Please welcome Wendy Waters.
So yes, as Mr. Sullivan was saying, that I help do the strategy research for about $15 billion in real estate under management for institutional and pension fund clients. We manage office buildings, rental apartments, industrial parks, and a little bit of retail. And since a lot of the other speakers we're going to start with, we're going to talk about residential, I thought I would start with the office market, and particularly the labor market. That what really intrigues me about Alain Bertaud's work was how well it matches up with what we've been using as models for understanding real estate demand and demand growth. And it really was models we built from actual experience. What drives real estate demand in Vancouver, in Toronto, in many cities, and I work, the $15 billion is across Canada that we do the strategy for. So this is a graph showing the growth of office employment in Vancouver, in the Metro Vancouver area, versus regular other jobs, all jobs. And what you'll notice is obviously office jobs have been growing faster than the rest of the jobs in this market, and that this really changed in about 2016. So think about the slope of this line as we look at some of the other real estate indicators that have happened in this market, particularly for residential, since 2016. A big change in the number of jobs. We know these are well-paying technology jobs in most cases, or knowledge sector jobs. Amazon's growth here, of course, we've looked at, we've talked, you hear about in the news, Microsoft, those types of jobs. What's been the impact? Well, one impact has been on office demand. So employment is a leading indicator for office demand. And if you look at these charts, we have vacancy rates. The gold bar is the downtown AAA, so the newer big towers. The purple bar on there to pay attention to is the older downtown. You'll notice for the Metro Vancouver area, I also have the suburban vacancy rates on there. Everything got very tight right before the pandemic hit. In fact, this may have been the tightest market in North America for office space. On the right is the implications for rental rates, and again, you see them rising quite steadily after 2016. And one interesting thing to think about in terms of where do companies want to be, just like Jens was talking about, where do people want to be? If you look at the rental rates for the C-class downtown, that's your older downtown buildings, you'll notice that until very recently, C-class was actually more expensive than A-class, so the really high-quality new buildings in the suburbs. A lot of companies would rather be in older buildings downtown than in something newer in the suburbs. And a reason for that, again, is the employment market. It's where a lot of their employees want to be. Labor is the biggest expense by far of the office tenants, and so they're competing for talent. So they're going where their employees want to be, and they really like downtown Vancouver. I mean, who wouldn't? You're surrounded by water, there's great view of the mountains, there's great amenities, and it's where a lot of companies and their workforce want to be. And it's not just the office market and the office tenants that are interested in being closer to population centers. This is a graph of the industrial market for Vancouver. And the top two bars, you may be able to make them out on this chart, or the top bars, they're lines, are Vancouver and North Vancouver. So the City of Vancouver, City of North Vancouver, these are rental rates. These are the most expensive industrial markets in the Lower Mainland. There's a series of solid bars a little bit lower down. Those are the inner suburbs, so Burnaby, New Westminster, Richmond. And then the dotted lines are out to the Fraser Valley. And so the industrial market as well is positioning itself. The tenants that want to be closer to either employees, whether they are logistics or they're doing light manufacturing, or they want to be close to customers, or some of both. So as we think about how the city functions, everything you tend to buy at the store, you touch, at some point spent time in a warehouse or a small manufacturing facility in an industrial area. And the importance of being close to people, or in some cases, or transit, to be able to access that labor force is really important. And Alain Bertaud mentioned the sort of the 60-minute commute for workers, but that's also important as the 60 minutes from a customer base. And how does this get into rental housing? With GWL Realty Advisors, a huge part of our growth right now is rental housing, particularly back east. We'd love to have more sites in Vancouver. We do have 2 buildings opening in the next sort of 15 months in the Lower Mainland. We have about 8,000 in the pipeline. So we spend a lot of time thinking about what's driving rental rate growth, what's driving, where do people want to live, why, and what kind of product we should be building for them. So rental housing, rental rate trends, rental rates have been going up very steadily in the Vancouver market. Chart on the left is just CMHC rental rates. Big change in 2016, around the same time that job growth took off. And you'll also notice the chart on the right is just the home price index, which probably a lot of you have looked up. That also really took off in 2016. So again, this employment, especially growth in this office-oriented employment, has really been driving housing markets as well, and growth in demand. And one of the key thing to think about in this demand is that these average rental rates have been going up, but they certainly have been somewhat uneven. They've been going up more in the core, other than a little bit of a change during COVID, but I'm trying to think of I have to think about long-term trends 10 and 20 years in the future, not just what's happening under COVID. So this one you can see the light green is before 1960, and the darker is buildings that were built more recently. And that rental rates, the cost of renting in an older building downtown or in Kitsilano is in fact it's in fact more expensive to be in the older buildings in the core than something newer out in the suburbs. And again, people are choosing that. You think, well, why wouldn't someone want to be in something new and nicer? But people really want to be in the core. And obviously the price of being in new housing in the core, the rental rates are even higher. And there's good, strong demand, and we do believe in this market. I'm going to actually just skip over this slide, I think, in the interest of time. But what's really encouraging, I think, for looking out for the next speaker is certainly that demand in Kitsilano, very high. People want to live there. It's close to the core. And it's that, along with downtown Vancouver, are markets where it does not seem to matter as much what the rents can be fairly high. There's a large market of employees who are coming for good-paying jobs that want to live there. And it gets frustrating when I hear, at a public hearing, oh, we shouldn't build that because it's not affordable. A lot of this, it is affordable to a lot of people coming to do this work, and it would be nice to see them move into new product and leave lots of other opportunities for other people. So with that, I will wrap up, and we can go to the next speaker.